Welcome to Yahoo Finance's coverage of the 26th annual Milken Institute Global Conference. We are on the ground here at the Beverly Hilton, where the world's biggest names in business as well as politics are gathered to discuss some of the key challenges facing the globe.
Lots of things on the docket: TikTok, Trump, and the future of society. Whole Foods under the umbrella of Amazon continues. Let's talk to Whole Foods CEO Jason Beekel. Jason, it feels like we were just here. So now you're what, a year into this job?
Yeah, about a year and a half.
How's the role going, and what is the state of Whole Foods inside Amazon?
Yeah, everything from my perspective is going great. Last January we unveiled our 10-year vision, Growing with Purpose. And a big part is reconnecting to our higher purpose, our core values, and igniting our entire team member base around our important growth plan in serving our customers in more ways, expanding our reach and our impact, and ultimately finding ways by which we can nourish people on the planet, which is our higher purpose.
Let's talk about those customers. We hear so much about inflation. What's causing this down the grocery aisles, and is there any relief in sight?
Yeah, I mean, this has obviously been on the minds of many customers for a while now. One of the things that we've been doing is working with all of our suppliers to find ways to minimize this impact. The reality, though, is between commodities, labor costs, inflation has been real. And so one of the things that we've been trying to work through is minimizing this impact for customers. And there's a number of ways that we've been doing this. One, we've increased the number of promotions for our customers. And as a result, we've actually seen double-digit unit growth in promotional items. And that's customers telling us that value is really important for them. We've also been putting some price investments, especially for our 365 items and some of our opening
That's the private
price
label?
point items. Yes, exactly. 365s being our private label. And why this is important is making sure that our customers can shop any part of the store and we can make it accessible. And no matter what budget you're on, you can create a great meal on products that we carry, and on top of it, the quality is going to be best in class.
Do you get the sense that a lot of your suppliers or the companies that sell into Whole Foods, they're getting it? We have seen a pushback to these higher prices over the past 2 quarters. Do you get the sense they're willing to push back some prices in coming quarters?
Yeah, and we've been having conversations to understand what are some of the ways that we can help meet customers' needs. And I think one of the challenges we have here is customers want value, but they also want quality. And they care about how the product was grown or raised and how it's been produced. And so there's costs that come with that. So I think part of what we need to do is make sure that we can find a point where customers are happy with the value of the product and can appreciate the work that's gone into it at the same time.
Are Whole Foods sales and profits growing?
We actually don't share that publicly, but I can say we're really proud of how the business has been growing.
You know I'm a Whole Foods shopper. I'm a Friday $1 oyster loyalist, but I'm also an avid shopper in the prepared food section. Has that come back after the pandemic?
Yeah, it has, but in different forms. When we think about pre-pandemic, a lot of folks are in the office 5 days a week. They're popping in the store, shopping the salad bar, and now we're in a world where customers are in a much more hybrid state. So they're in the office a little bit, they're working from home, they're on the go, and so what customers are buying is different in that space. So we're seeing pre-pack being a much bigger part of that business than what it was before the pandemic.
How aggressive is Whole Foods in terms of opening new stores?
This is one area I'm really proud of. If you look at the last couple of years, our store growth has been in the single digits. We have now brought our stores in development up to 75, and our goal is to open 30 plus stores a year. And again, from being single digits to that's an expansive growth trend that we've taken on. And we're really excited about it because one, we've got a lot of customer interest, a lot of communities that are looking for us to bring new stores. And I'm excited because we're going to be bringing new formats in that as well. A perfect example of that is we just announced in March Whole Foods Market Daily Shop. So this is a smaller Whole Foods Market. Our very first store will be opening in the Upper East Side in Manhattan. And this is going to allow us to open stores where today we can't fit another full physical core Whole Foods Market store. And so this will be an opportunity for us to serve customers in a new way And I think this would be a great opportunity, especially for fill-in shops for customers. So, as an example, for this new store, you might shop once a week at our Upper East Side flagship store, if you will, and you might pop into the daily shop 1 or 2 or 3 times a week as a customer. And so, for us, this is going to allow us to better meet customers' needs, especially for those who are on the go.
We've seen Amazon test various concepts of its grocery. I was thinking back to the convenience store. You walk in, take something off the shelf, and you walk out. You don't have to interact with a cashier. Is that day ever coming to Whole Foods?
Yeah, I think we're working on more and more ways to make seamless checkout. One of the exciting areas we have right now is dash carts. And so this is a project we've worked on with Amazon. And so these are carts that you can walk through the store and check out as you're actually shopping.
Those are in store now?
Yes, we have those in several stores right now. Our San Mateo store has been our most recent launch here in California. And what's great is it weighs items for you. You're bagging your items as you go through the store, and you just walk through a special lane on the way out, and you're good to go. And so I think this will be ways by which we can help simplify the customer experience and use technology to create a more engaging experience at the same time.
I'm an avid user of the pay with your palm. I mean, it just works. I don't have to reach into my pocket and pull out my debit card. But is that the way you're thinking about technology inside of Whole Foods? It's making things simple. It's not a wholesale reinvention.
Yeah, Amazon One is also one of my favorite technologies we've implemented. It's now in all of our US stores, and I've had so many customers share, like, not only one, they love how magical it is, but it saves time. You're not having to pull out, your phone, scanning a QR code to identify as Prime, and having to pull out a credit card. And so one of the things that we want to do is be able to use technology to simplify how we run our business. So for our team members, it's helping, take away some of those administrative, tactical, time that they're spending that's not adding value for our customers, and reinvesting it. So when you're going to our seafood counter, we can engage with you and help make that selection of what you're looking for dinner that night, or help shuck your oysters. And at the same time, for customers, providing digital experiences that can help you plan your visits to our stores, help you support your shopping trip while you're in our stores, whether it's locating an item, helping figure out a pairing, or through our checkout process, just making things more streamlined. So I think there's going to be a lot of ways by which we're going to partner with Amazon to deliver a great customer and team member experience through technology.
I'm a transparent guy. I told you off camera, I've been every Friday I go get my oysters. I'm in Whole Foods a lot during the week. And we've built up a great relationship with the people in the fish department. And now they are blossoming and opening up new Whole Foods locations. It's amazing to see. Does that apply to other parts of the organization? I mean, are you now using your labor to promote from within? And a great example is Chipotle. People that started on that front line making burritos are now running 5 or 6 restaurants.
Yeah, that's one of the things I'm so proud of being part of Whole Foods Market. Investing in team member growth and happiness is one of our key priorities within Growing with Purpose. And for us, being able to promote from within and create a long career for our team members that is enriching is such a key priority for us. And we have countless examples of our team members who've started out as part-time team members, become store team leaders, become operational leadership. And I have 2 direct reports right now that started out as part-time team members in our stores. And so one of the things that we've been doing is investing in growth initiatives and development initiatives for our team members to help them develop the skills for them to take the next step up. And one of those we call is our CD, or career development programs. And there's nothing like it I've seen in any other retailer. And so for all levels of our leadership at the store level, we have one of these programs, and it provides a safe and supportive environment for a team member to work side by side with a peer training in that role, and being able to take that next step either in that store or another store, or helping support them to the next level of leadership. And so there's countless of opportunities that you have within the company, whether it's at our stores or one of our support offices.
Real quickly, last year when we spoke briefly here, we were just starting out as the CEO of Whole Foods. You gave me a good undiscovered food gem. I think it was some form of hot sauce that I put on my oyster. Do you have a new one for me?
Yeah, I mean, one of the things I would ask you to look at is look for some of the regenerative products that we have in our store. We were the first retailer to launch private label products that are regenerative organic certified. We've got some dried mangoes right now, Whole Foods Market branded. They're outstanding. If you like lentils, we've also got some varietals of those as well. But keep an eye out for those because they're going to be some of the best products we've got on our shelves.
Let's bring in Disney's CFO, Hugh Johnston. Hugh, good to see you. It has been a while. Welcome back to Yahoo Finance. Let's start on that streaming business. The company pared its losses, the operating losses, to $18 million compared to $659 million last year. I guess one of the biggest questions investors are probably wondering, is that sustainable?
Yeah, good morning, Brian. We think it is. We feel terrific about the progress we've made on streaming. Obviously, we focused on both the cost side and the revenue side, and both are delivering. The streaming business grew 12% in the quarter, which is obviously a nice, healthy number for us. In addition to that, we're managing our spending much more efficiently. So we will go negative in Q3 a little bit more based on the timing of some cricket rights. But as we've indicated before, we'll be profitable in Q4, and we expect to build on that in 2025.
Yeah, it looks like you had a good, successful quarter, Hugh, in Disney Plus subscriptions. Now, that comes after Disney Plus took price hikes, in the fall of last year. Just given that momentum, do you think you have more room to push prices?
Yeah, we think we do. I think you're going to see prices steadily go up over time in the streaming service, mostly because the content we have is worth paying for. So obviously we generate a lot of our own IP, both on the television series side as well as on the movie side. And in addition to that, as we continue to build out the streaming service, in particular, putting an ESPN tile on later this year, and then adding ESPN Flagship as an option next year, we think there's just going to be more and more value there for consumers, and they'll be willing to pay more for it.
On the streaming business, Hulu subscriptions only up 1%. Now, you're trying to, I guess you're working with advisors. You have come up with a valuation on what Hulu, that remaining stake, is worth. Comcast has its valuation. Do you even need Hulu as part of the portfolio? 1% growth, it's not mind-blowing to pay maybe potentially $28 billion for the rest of this asset.
So I'm not going to say much about a negotiation that I'm in the middle of. I've got a pretty good discipline about talking about deals after they're done and not before they're done. That said, we already own 2/3 of Hulu, so it's already largely a business that we are in control of. We'll see where the negotiation goes from here, but we're continuing to work our way through that.
Fair enough. On the linear operation, help investors understand this asset. So the sales were down, the profits were down. What do the next few years look like for this asset, and what do you have to do to improve operating profits?
Well, I think it's important to think about entertainment in totality rather than thinking about the individual parts, because essentially it's the same consumer. They're shifting from one distribution channel to another distribution channel. So as we see growth in streaming, obviously those are the eyeballs that oftentimes previously were in the linear business. I tend to look at it more in aggregate, and as I look at it in aggregate, I think we've got a business that's got the potential for good, healthy top line, and over time will actually increase margins on the streaming side as the linear side continues to erode a bit. That said, I do suspect we're going to hit a point where the linear business will start to level off because people do choose to leave for certain reasons, and for a lot of people, they choose to stay. Eventually, we're at the point where it's just the stayers that will be there.
Is the business still being reviewed for further cost cuts?
Yeah, I mean, any time a business is losing revenue, you have to look at it for cost cuts. And I think the team is doing a terrific job trying to come up with creative ways to produce television programs more cheaply, share resources where it makes sense, take a hard look at really every dollar that's being spent and say, okay, is this one that's necessary, or are we better served cutting that dollar and putting it elsewhere in the business so that we can continue to drive growth as an overall company?
I'm sure you're watching, you and the team, Hugh, on what's going on, the drama around Paramount. Wherever that asset ends up, how does it impact your linear networks?
I'm not sure it's going to make much of an impact on us, to be honest with you. I know they've got a lot of sorting out to do over there, so we're not really a part of it. So I couldn't tell you where I think it's going to go, but we're sort of focused on making sure we deliver the best content to consumers with our business, and then we'll let the chips fall where they may.
Big quarter from the parks business, Hugh, especially international. What are you seeing there?
Yeah, the growth has been terrific in parks. 10% revenue, 12% OI, and the parks specifically component of it actually grew OI 13%. International continues to lead the way for us, and it's very broad-based. All the parks are making money now. We're seeing very strong business in Paris, very strong business in Shanghai. In addition to that, the Hong Kong business is doing well. And the business in Tokyo has been quite strong. So feel very, very good about those businesses. And candidly, I think we've got lots and lots of potential future growth in parks on the international side.
I'm one day into the Milken Conference, Hugh. That's where I'm doing this interview. And lots of chatter, I think, on signs of a U.S. economic slowdown. Of course, we had some problems or slowdown in the recent GDP print. Are you seeing any signs of a slowdown in summer bookings at Disney?
We haven't seen any of that at this point, so we certainly feel good about that. Now, as I understand it, the lower income consumers, sort of in the lower deciles, are the ones that are feeling the pinch a little bit more. But even for those consumers, the family vacation is one that's kind of a priority for people. So when they're making decisions around what to cut, we typically get cut a little bit later than most. So still feeling good optimism about travel in the U.S. and in particular feeling good optimism about people coming to our parks.
Before you came to the company, Hugh, as CFO, there was a target put out there on CapEx investing in the parks business. Really, it was a mind-blowing number, $60 billion over 10 years. Now, the CapEx increased slightly in the most recent quarter in the parks business. Are you still committed to that $60 billion number?
We are. That number is still very much intact. Now, keep in mind, that's not an incremental number. That's a total spend. On a normal basis, we probably would have spent somewhere in the $30 to $40 billion range anyway. The reason we're doing it is the parks business has so much in terms of growth opportunities. The returns on invested capital are terrific in that business. The margins, as you know, are in the mid to high 20s. So if you're going to invest, those are the types of businesses you want to invest in. And I think we're going to get terrific returns for shareholders out of those investments.
And lastly, Hugh, of course, this is the first quarter earnings being reported after the battle with activist Nelson Peltz. You battled this guy twice. Of course, at PepsiCo, now and coming here at Disney. What has this experience been like, and what is it like for a big company like Disney to go through this type of situation?
Well, candidly, it was a bit of a distraction for a couple of members of the senior team. That said, look, the management team under Bob is focused on creating value for all the shareholders, not just one or two of the ones that tend to be a little bit more talkative. And as long as we keep our eye on delivering value for all the shareholders, I think we'll be in a terrific spot going forward.
Well, Hugh, I didn't slip and almost ask you a PepsiCo gross margin question, so I'm proud of myself, and I am proud of you for not even bringing up the company. Hugh Johnston, always good to see you. Thank you for making time for Yahoo Finance. We appreciate it. We'll talk to you soon.
Let's talk to Pinterest CEO Bill Reddy. Bill, good to see you at the Milken Conference. I've seen you all around the world. Good to see you in California.
Yeah, good to see you again.
7 straight quarters of what? MAU?
Accelerating user growth, yeah.
How?
So well, it's a fantastic quarter, but it's really the culmination of initiatives that we've been putting in place over the course of the last nearly 2 years. And we hit an all-time high in users, 518 million monthly active users, and we've accelerated 7 quarters in a row on users across every generation and across every geography. But where we're really winning is with Gen Z. Gen Z is now 40% of the users on our platform and our fastest growing demographic.
That's what, people in their late 20s?
Yeah,
what are they doing on Pinterest?
It spans, sort of teenagers through, college graduates and sort of folks early in their career. But they're coming for 2 primary reasons. One, we've really improved the actionability on the platform. Pinterest is where Gen Z goes to shop. And so Pinterest had previously been great at window shopping, but you couldn't really get to the things that you found. Over the last 2 years, we've really been opening the stores, making it really easy for users to connect to the things that they find on Pinterest. And that led to us more than doubling the number of clicks we sent to advertisers year on year in Q4 and in Q1. So that actionability and shoppability is really resonating, but then positivity is really resonating as well. We've really invested and making Pinterest a more positive alternative to traditional social media. And when you ask Gen Z, they will tell you that they see Pinterest as an oasis away from the toxicity that they see on much of the rest of social media, and that's cutting through. And it's a great example of doing well by doing good.
I want to get back to that because I know that that's something you've been very focused on literally since you started at Pinterest.
That's right.
When you talk about shoppability though, is that the power of your AI, any new AI you're releasing behind the scenes to help people shop on the platform?
Yeah, absolutely. So AI has been a massive tailwind for us. And so, we've done a few things. One, we really lean heavily into large language models, next-gen AI, like GPU serving, things like that. We now use models that are 100 times larger than the models that we were using a couple years ago. That led to roughly a 10 percentage point improvement in relevancy of the recommendations we make to our users. But we've also been doing things to design our product to create great signal for that AI. So for example, we've really leaned into human curation at scale. So it's not just that users come to Pinterest to shop, they come to Pinterest and curate and put together outfits, put together room designs. And so when those users say, oh, I'd put this handbag with this dress and this pair of shoes, or to put together a room in this aesthetic, I'd choose this lamp and this sofa and this rug, that gives us really great signal to make better and better recommendations to our users by training the AI on that really unique signal. And importantly, it's helping users to do things that help them take action in their real life, not just keep them glued to a screen, but actually make their life in the real world better as well.
I'll put this question to you. So Warren Buffett's annual shareholder meeting, he sounded concerned on an AI after someone, I guess, made a video of him talking. Now I asked IBM CEO, does he share those concerns? He says, no, they're fantastic. What's your views?
I think like any technology, the AI is neither good nor bad, but it can be used for good or bad. And so I think it's a totally appropriate conversation to be talking about what could the harms be and how do you avoid those harms. And on our side of it, we're trying to prove that you can use the AI for good. So we've done things like inclusive AI. We've launched features like inclusive AI that we're doing that creates diversity by default in our feeds. We're tuning the AI for positivity. So roughly a year ago, when we saw each other last at the Cannes Festival, we launched the Inspired Internet Pledge, where we committed to measuring emotional well-being outcomes on our platform. And so we're tuning the AI to serve more things that help users come away feeling better about themselves. And so body positivity is an example of that, where we've launched body type AI so that people are able to see a more representative set. They can choose the body type that represents them best, see a more representative set of not just what the average fashion model looks like, but what they look like and what real people look like. We've done the same thing with like skin tone filters and hair pattern filters. And so these are examples where you can use the AI for good. And that's what we've been focused on, is like how do you use AI for good? And you can also use AI to avoid some of the bad things as well, where we've used AI a lot to get bad actors off the platform and build safety features through AI. So again, AI is neither good nor bad. Like any technology can be used for either, so we're focused on how do we use it for good, and how do we also use it to avoid the harms that could be possible.
You and I in the past have talked about TikTok, what a ban might be. It is what it is. But is the best possible thing that could happen to the internet is something like this gets banned and doesn't exist in the US, so we can go back to focusing on other things and getting life done?
What I would say, rather than comment on any one platform, we're not sitting back hoping for the demise of other platforms. We have accelerated with Gen Z because we're doing something really unique in the world of social media. And it's on two fronts. Users come to Pinterest with intent. We're not an entertainment-based platform. Most of social media is entertainment-based. The user's in a lean-back entertainment consumption mode. Users come to Pinterest with intent and purpose, whether it's to shop or to make or to do or to buy. They're coming with some intent and purpose, and we're helping them fulfill that intent and purpose. So that actionability is very different than much of the rest of social media. And the positivity that we're investing in around making sure that we tune the AI for positivity, tuning for emotional well-being outcomes and more positive emotional well-being outcomes. You hear it from Gen Z users. They will tell you they come to Pinterest because they see it as an oasis away from the toxicity of the rest of social media. So again, is it understandable that regulators are going to, pay attention? Governments and regulators will look and pay attention if they think there are potential harms. that totally makes sense, but we're not sitting around waiting for government action. We're focused on avoiding those harms on our platform, tuning for positivity, and giving Gen Z something that's really great, that's different from the rest of social media.
Before I let you go, tell me if I have this somewhat right. So you have a deal with, or a partnership with Amazon and Google. Do investors, are they underappreciating how those two partnerships will change your cash flow and your earnings over the next few years?
Well, what I would say is, I think you are seeing, the acceleration in our ad business really cutting through with advertisers. First and foremost, do we perform for advertisers? We more than doubled the number of clicks we sent to advertisers in Q4, and we did it again in Q1 and actually accelerated even further in Q1.
Is that because of Amazon?
It is really because of the actionability that we're bringing to the platform, and that's through a combination of efforts. A lot of it is retailers coming to us directly, but then we've also, as you noted, augmented that first-party demand on our platform with third-party demand coming from Amazon, who we've been working with for coming up on a year. Google we added more recently for international markets.
Okay.
And so that is helping to bring more shoppable, actionable inventory onto the platform, but it really is a composite effect. And what I would say is that when you step back from it all, Pinterest is firing on all cylinders. If you look at the initiatives I laid out when I came in nearly 2 years ago, that we went through at our Investor Day last September, our strength has been broad-based. We roughly doubled our revenue growth rate from Q4 to Q1. We doubled it from H1 to H2 last year. We doubled again from Q4 to Q1. And we've accelerated user growth in every geography, with every generation. And so it is really all the initiatives we've laid out around actionability and positivity, better performance for advertisers. All those initiatives are hitting and performing well, and so the strength is broad-based.
Lots of focus in these halls on the outlook for interest rates and the economy. Joining me now is a very special guest, Apollo Global Management CEO Mark Rowan. Good to see you again.
Thank you. Thanks for having me.
Appreciate it. So within the businesses that Apollo owns, what have you seen, or what has the impact been from higher for longer interest rates?
Very little.
Very little.
Very little. We, the way I go through it is you think about what's happening in the economy and what's happening in the US. 3 years ago, we decided to build infrastructure. There's no infrastructure opened. 2 years, semiconductor plants, no semiconductor plants opened. A year ago, Inflation Reduction Act, none of those plants opened. We've been reshoring our supply chain. US has been the largest recipient of foreign direct investment last 3 years in a row. Something tells me we're ramping defense production. All of those things are stimulative to employment. And it does not surprise me. Everyone who wants a job has a job, which means it's very hard to dent the economy. Maybe financial markets, yes, but the underlying economy is strong.
So soft landing achieved, do you think?
I think we've had a soft landing. When rates have gone up 400 basis points and the wheels haven't come off the bus, as they say, I think that's the definition of a soft landing. Will it continue? I think so.
Do high interest rates do they matter to a business like Apollo?
Look, interest rates, the level of interest rates always matter. I'd say it matters almost in reverse. I think investors kind of deceived themselves that they were good investors for the past decade, rather than riding an era of very low interest rates. I mean, look at what's happened in real estate, look at what's happened in other interest-sensitive investments. You thought you were the best investor in the world. You moved to Austin, Texas. You bought all multifamily. It was going great.
Yeah.
The changing cap rate has halved your investment. And now your 3.5% mortgage is being refinanced at 7.5%. You did everything right. You just didn't watch what was happening to interest rates.
I'm an avid listener of your earnings call, Mark, so I will go back to the recent one. And you talked a little bit about investors being levered to NVIDIA, Apple, and Amazon. What do you think the impact to markets have been because of that, being levered to those stocks?
Look, we are in a liquidity-driven, an interest rate-driven, a sentiment-driven market. And sometimes I ask, particularly academics, do we even have price discovery anymore in US markets? It's not clear, especially when you look at what a hard time active management of equities. Here are people who have spent their whole lives becoming good investors, and they as an industry have failed to beat the market 93% of the time for 20 years. Did these people get stupider? No. But did the structure of markets change so that we have positive reinforcement of cyclical flows into index funds and other forms of passive investing? I think we have fundamental changes in market structure that we have not dealt with as a society yet.
So to the investors that are, look, I see it on Yahoo Finance, they love these stocks, they love these companies. What's your advice to them? Is now the time to rethink how you invest?
So look, I'm not in the stock picking business, but very few people come in every day and try to buy 45 or 50 PE stocks. It's just not what we do. I look at the broader trend. We used to have 8,000 public companies. We now have 4,000 public companies. People think most of the action is in public markets. 80% of companies over 100 million of revenue and 80% of employment is in private companies. How do investors have exposure to private companies? Well, the answer is they don't. Institutional investors have it through a product, private equity. But most investors don't have any exposure to private markets. We are just, as an investment world, dipping our toe into private credit. So if you think of the two big buckets that investors have, debt and equity, debt is going first. In debt, there are things like rating agencies that tell investors the level of quality between public and the level of quality between private. And if investors can earn higher returns and have better diversification in private markets, or by adding private markets to a public portfolio, they'll do that. It'll take time in equity, but I joke that they may not own private equity in funds, but they will own equity that is private. And it's our job as an industry to create products that allow investors to come into this marketplace to get the benefits of higher returns and diversification.
I can't think of really anyone that could speak to this better than you, Mark. Are we in a retirement crisis, and then how do we get out of something like this?
Look, we are worldwide. It's not just we in the US. Everywhere in the world, we have, Western world at least, we have aging populations, we have governments who are doing less, and we've had an era of very low interest rates. For the most part, people have not saved appropriately for retirement. How do we get out of it? Slowly. There's no magic bullet. You look at places around the world where they've done an amazing job. Take Australia, superannuation funds. What's been the secret? Well, the secret in part has been forced savings on an annual basis, matching from employers. But a big part of the return, superannuation, the design of it was to give public investors access to private markets under professional supervision. Contrast that to what we're doing in the US. We have between 12 and 13 trillion dollars in 401k plans. What are these people invested in?
They don't know.
Well, I'll tell you, on the whole, they're invested in daily liquid mutual funds and ETFs for 50 years. Why are they daily liquid for 50 years? I don't know. We haven't thought about it in a really long time. Giving people access to the totality of a marketplace, public and private markets, I do think is heading our way. I think for our industry, not just for Apollo, this is a very bullish thing. We have built a whole industry out of a very small bucket called alternatives. We are branching out now and taking over pieces of the fixed income bucket of our large investors, particularly the investment grade private credit bucket. It will not surprise me on the horizon to also think about equity across public and private markets, and not just in private equity fund format.
In the couple minutes that we have left, Mark, I have two final topics. You're really one of the first leaders to speak out on anti-Semitism at college campuses. And since then, things have really hit another level. I think USC campuses are closed today. What's your take or read on the current situation, and ultimately, what's the end game of this?
Look, it's hard to give you the end game, but I say very tongue-in-cheek, unfortunately, the fight against anti-Semitism is a growth industry. And that's what we're seeing right now. The protests we're seeing on college campuses, are they anti-Semitic? They are absolutely anti-Semitic. Are they anti-American? They are anti-American. They're actually anti-Western. We're thought of as these protests are leftists. I used to think of the left as liberal. Now the left is illiberal. Where is this going? I think the vast majority of professors at these universities, the vast majority of students, the vast majority of people in this country totally get that there is a way and a right to protest. People should have free speech, people should protest, but there is also a way to take over, to cause damage, to threaten, and to intimidate. And this is a failure of leadership. You look at places like University of Florida, University of Texas, and Vanderbilt, where the leader came out and said, free speech, yes. Right to protest, yes. Time and place, appropriate. They don't have the problems that you have on other campuses where the leader was somewhat ill-defined in terms of the rights. And the notion that we've been catering to a small group of people who hold extremist views, they're entitled to those extremist views. What they're not entitled to is to impose their will on the rest. So I do think we're getting a little bit of a snapback here. where people are just tired of it.
Well, I know a lot of people appreciate you speaking out on this, Mark. And last but not least, and look, I understand you can't talk a lot about any potential bid for Paramount, I get it. But where does a policy value in an asset like that? Can you help us understand like the thinking behind it?
Look, we are a purchase price matters, value-oriented firm, and the way value is created today is usually in places that are undergoing substantial change. So media as an industry, I don't have to tell you, sitting in Yahoo, that media is undergoing substantial change. The notion that you could come in and build on a great business and try to navigate through these turbulent times, I think is where we create value. We historically have been long investors in media. We've done it across almost every sector in media. Obviously right now we are invested in Yahoo, we are also invested in Legendary, and by bringing along a respected industry partner, Sony, I think we look at this as just an interesting opportunity to create value in an industry undergoing change.
IMF Managing Director, Kristalina Georgieva, Managing Director, good to see you again. Congrats on the new 5-year term.
Thank you very much.
Really enjoyed the panel. You just got off moments ago, and you talked a little bit, and you have been talking about this, the tepid 20s. For the average investor out there, or the average economist, what do you mean by that, and what should you expect in terms of growth in the tepid 20s?
What we have today is a world economy that has proven to be remarkably resilient. Just a year ago, we feared recession. That didn't happen. But we also have a historically slow growth projected over the next years. So if we don't take action to generate more impetus for growth, we are going to end up with a decade that is disappointing. Just to give you the perspective, before the pandemic, on average, the world would grow 3.8%. Now we project just slightly over 3%. And at the same time, the population on the planet has increased. The aspirations of people for better lives are there. They are not going to be met with such a disappointing growth. And this is why at the IMF, we strongly recommend to turn attention to more growth-oriented fiscal policy, monetary policy, and of course, recognizing that what would make the biggest difference is human capital and the foundation for a digital transformation, for a green transformation.
Can the U.S., let's focus on the U.S., can the U.S. take those fiscal actions given the high levels of debt the country has?
But the U.S. Is in a very privileged position right now. It is because of high interest rates, strong dollar, and very strong economy, very attractive for financial flows. In fact, 1/3 of the money that moves around in this world comes to the United States. It was only 18% before the pandemic. Now, if in this condition, the US is still shy to take action to reduce debt when the economy is strong and when financial flows come this way, then when would it do it? And we believe that when we did a very careful analysis of the revenues of the United States and the spending in the United States, we identified plenty of steps that can be taken that are not affecting growth prospects. There are tax exemptions that are not growth enhancing that can be eliminated. And also on the spending side, the US is still spending as if it has youthful population that it had some decades ago. That has to be corrected.
I'm still pretty young.
You are, but US as a whole, unfortunately, is aging. I mean, it is being helped by being still the most attractive place to live, so many young people are coming to the United States, but overall, fiscal policy in the United States really needs to take care of this, because with interest rates so high, the burden of servicing debt is exceptionally high. Today, the federal government spends over 17% of its revenues just to service debt. In 2015, when interest rates were at their lowest, they were spending less than 7%. That's a very massive increase, and it begs for action.
I need to get in your mind for a second because we have former President Trump who has floated 60% tariffs on Chinese goods. When you hear that, how bad would that be for U.S. growth?
Look, I mean, who is the president of the United States is the choice of the American people. And we are never commenting on policies that are not being announced. So we need to see what is the choice of the American people and then what policies are being put in practice that are in place. But what we need to remember in this context is that the reason the American people and people around the world have turned against globalization is very serious. It is that for quite some time we all would claim that because globalization lifts up incomes on average, it is good for everyone. No, it wasn't. We had communities that suffered the negative impacts of their jobs being wiped out without sufficient attention. And I actually think that for the future, it is, of course, the issue of how one manages trade and investments. We are in favor of a more integrated economy because it leads to better allocation of capital and higher incomes for everybody. But to do so, being mindful that if in society there is sense of unfairness of the economic story, then people will be on the street and then we would see more push back on what has worked for us. I mean, just look at the last 30 years. The tremendous benefit for everybody from an integrated global economy. It would be really a tragedy if we are to lose it.
One of the things that U.S. consumers continue to have a problem dealing with is inflation. Now, we heard Chair Jerome Powell say last week he doesn't see stagflation. He sees inflation coming back down. Do you see stagflation? Why is inflation still high?
Well, the reason inflation is going sidewalk, not going down as it has been for some time, is it comes from the strength of the U.S. economy. The consumer is still pushing for goods, and that strength turns into a problem for Chair Powell. By the way, this is why it is important on the fiscal side to be more prudent so the fiscal doesn't inject more risk of inflation staying here for longer. Let's remember that Chair Powell holds a lot of the capacity to cool inflation, but not all. What we see in the United States, very important factor is the repair of supply chains and the ability to meet this demand that is still quite strong. In our baseline, we expect to see inflation going down to target this year, and we expect to see the Fed starting to cut. But
Two cuts this year.
To cut this year, but it would depend on developments in the United States, and unfortunately, it also depends on developments outside of the United States. If we have geopolitics to push energy prices up, that would be very problematic for Chair Powell, but it would be problematic for everybody around the world.
Thank you for doing this. It was so nice to see you again. I know you're a very in-demand person here. We'll let you get back to the action. IMF Managing Director, Kristalina Georgieva, good to see you again. We appreciate it.
Great to see you.